Many individuals hear Bitcoin and believe they've missed their opportunity, that owning an entire coin is necessary to significantly impact their financial future. However, the reality is that it may not be necessary for you to do so. Owning a mere 0.1 Bitcoin, which is 1/10 of a coin, may hold the potential to substantially enhance your financial position in the long run. Today, I'm going to guide you through the reasons why, using straightforward calculations and practical examples, you may find this small portion of Bitcoin to be an unexpectedly impactful component of your investment portfolio. Now, let's analyze the figures and explore the potential outcomes. Initially, it's important to note that Bitcoin is limited to a maximum supply of 21 million coins, permanently. This situation differs significantly from the US dollar, as the Federal Reserve has the ability to increase its supply at any time. The supply is predetermined as established in Bitcoin's original programming, and this is upheld by a vast network of computers globally. This indicates that the total supply will always be capped at 21 million, ensuring scarcity. However, it's important to note that not all of those coins are readily available for investment. Analysis of blockchain data indicates that approximately 3 to 4 million Bitcoin may be permanently lost due to forgotten passwords, misplaced hard drives, and mishaps from the early days when individuals were unaware of the value of their holdings. The effective supply is approximately in the range of 17 to 18 million coins. Let's analyze that in a broader context. The global population has surpassed 8 billion individuals. If we were to distribute 17 million Bitcoin evenly among the population, each individual would receive approximately 0.0021 Bitcoin. At the current price of $121,000 per Bitcoin, that equates to approximately $254 today. Owning just 0.1 Bitcoin positions you with nearly 48 times the global per-person share. This positions you among a select group of holders. Currently, with Bitcoin priced at $121,000, the value of 0.1 Bitcoin stands at $12,100. That amount could cover the expense of a pre-owned vehicle, a reasonable kitchen renovation, or several family getaways. However, it's important to consider that Bitcoin has demonstrated a pattern of substantial growth over extended timeframes, despite its notable volatility. Do subscribe to our channel and also press the like button to know more financial insights. Let's analyze various price scenarios to evaluate potential outcomes. Scenario 1. The value of Bitcoin increases to $200,000 per coin. Your 0.1 Bitcoin has a current value of $20,000. That represents an increase of $7,900 from your current position, without any additional contributions on your part. Scenario 2. Bitcoin attains a value of $500,000 per coin. Your 0.1 investment would now amount to $50,000. Transforming today's $12,100 could provide the means to purchase a new car, significantly reduce your mortgage balance, or fund a couple of years of college tuition at a state institution. Scenario 3. Bitcoin reaches a valuation of $1 million per coin. Your 0.1 investment has appreciated to $100,000, representing a substantial increase of nearly tenfold from your initial outlay. This amount could provide substantial coverage for living expenses during retirement or act as a significant reserve for emergencies. Currently, several analysts, including those from prominent financial institutions, have proposed long-term projections that are even more optimistic, particularly if Bitcoin gains traction as a global reserve asset or if institutional investors choose to accumulate it in significant amounts. Envision a scenario where Bitcoin reaches a valuation of $2 million for each coin. Your 0.1 could potentially translate to a value of $200,000. However, it's important to maintain a practical and sensible approach. Even in the absence of significant price forecasts, holding 0.1 Bitcoin offers an additional advantage. It contributes to diversification. Bitcoin serves as an alternative asset, providing a potential safeguard against inflation and the depreciation of currency, separate from conventional banking and stock market frameworks. If you've observed an increase in your grocery expenses, insurance premiums, or utility bills, you're likely aware of the effects of inflation. The purchasing power of the US dollar diminishes over time, having decreased by more than 85% in the past 50 years. However, Bitcoin, due to its limited supply, does not diminish in value in the same manner. Despite its short-term dollar value fluctuations, it has consistently demonstrated a strong ability to outpace inflation over extended periods. It's important to note that acquiring 0.1 Bitcoin can be approached gradually rather than in a single transaction. Bitcoin can be divided into 100 million smaller units known as satoshis, allowing for purchases in very small fractions. This suggests that you might consider implementing a straightforward dollar cost averaging approach, such as investing $200 or $500 each month, and steadily build up that 0.1 over time. This strategy allows you to sidestep the anxiety associated with attempting to pinpoint the ideal entry price. However, it's important to consider the potential risks involved. The price of Bitcoin experiences significant fluctuations. During bear markets, it is possible for values to decline by 30%, 50%, or even 70%. If you find it challenging to handle those fluctuations, this opportunity might not align with your preferences. Historically, it has been observed that following each substantial decline, Bitcoin tends to recover and reach new peaks. It is essential to adopt a long-term perspective. Think in terms of years rather than months. Well, this video is for entertainment and informational purposes only. You must do your own research before investing. Another important aspect to evaluate is adoption. We are currently in the initial phases of development. Current estimates indicate that merely 2 to 3% of the global population possesses any Bitcoin whatsoever. If adoption experiences significant growth in the next decade, via mainstream financial platforms, retirement accounts, or corporate balance sheets, we could see a substantial increase in demand relative to the constrained supply. When demand increases while supply remains constant, prices are likely to trend upward over the long term. Let's examine this from a retirement perspective. Imagine you are currently 50 years old. Over the next year, you will amass 0.1 Bitcoin. Maintain your position until you reach the age of 65. If Bitcoin were to double from its current value of $121,000 to $242,000 per coin over the next 15 years, your investment of 0.1 would grow to $24,200. That represents a cautious estimate when taking into account Bitcoin's historical performance. If the amount reaches $500,000, you could anticipate $50,000, potentially sufficient to cover several years of Medicare premiums, property taxes, or other retirement costs without needing to access your other investments. The storage aspect is more straightforward than many individuals realize. By utilizing a trustworthy exchange or a hardware wallet, you can effectively safeguard your Bitcoin without requiring advanced technical skills. Additionally, in contrast to gold or real estate, Bitcoin allows for swift global transfers, typically completed within minutes and often incurring minimal transaction fees. Ultimately, the figure stands at 0.1. Bitcoin should not be viewed as a fleeting trend or a quick path to wealth. It's essential to strategically allocate a modest yet significant portion of your resources into a limited, worldwide, and decentralized asset that may have a pivotal impact on the future of currency. For numerous investors, this is an opportunity to evaluate, particularly while the price remains accessible for a fractional share. If Bitcoin realizes even a fraction of its potential over the next 10 to 20 years, possessing just a tenth of a coin could significantly alter your financial landscape. If it doesn't perform as expected, the risk associated with a small allocation remains manageable when weighed against the potential for upside gains. While some may hesitate, believing they need to acquire an entire coin, it's important to recognize that even a small portion can lead to significant outcomes. Now, watch the video appearing on the right side to know why wealth building gets easier after $100,000. Also, subscribe to our channel to help us complete our goal of 10,000 subscribers and to know more insights on personal finance.